One of the greatest challenge of traders is ability to identify either if a trend is continuing or a trend is about to reverse. So predicting this entry many a times become difficult even when price is in your point of interest. And that is why this particular video I'm about to share with you is very much important. In this video I'll be sharing with you exactly the types of divergence and how you can apply this divergence in order to have a high probability entry. Now, what is divergence? Divergence is simply very simple, and I'll put it in a clear terms. It is a disagreement between your chart. So this is our chart, a disagreement between the chart and the indicator window. What that simply means is, if you look at this, price is in a downtrend. It's giving us a lower low. But look at what the indicator window is doing. The indicator window is giving us what? Higher low and a higher low. So it simply means that price will be giving you a lower low on your main chart, while on your indicator window it will be doing the opposite of what is happening on your main chart. When you have this is what we refer to as what? Regular divergence, and this suggests that either the trend or the pullback is about to reverse, especially when you had a break of structure. Most of the movement from here is what result into a break of structure. You can see that after price left here, what happened? Price break this structure to the upside. They will have a case of what? Hidden divergence. What is hidden divergence? Price is giving us what? A higher low, and what is the indicator window giving us? The indicator window is giving us what? A lower low. So this disagreement is a continuation trade. So whenever price is giving us pushing to the upside, the indicator window is doing the opposite, is a sign of what? Of trend continuation. And of course, anytime you are having equal low, you see in this case this is an equal low, but the indicator window is making a higher low and a higher low, just as in this scenario. It also signifies a reversal, a continuation. This cannot be well explained without being seen on the main chart. So let's go to the main chart and let me show you exactly how you can take advantage of this. Now you can use many indicators to identify this divergence. You can use your RSI, you can use your stochastic indicator, you can use your MACD, but in this particular video I'll be using the commodity channel index. So let me show you my indicator setting. First, my moving average period 20. You can take a screenshot of this. The method is exponential. Alright, then we have our Bollinger Band. The period is 130. So here is the setting, and then we have our RSI. So you can see the level. Please ensure that this style, the color is white, and if your background is black, kindly change that color to black. Once you have done that, you can progress and then move toward the next indicator is our commodity channel index, and this is exactly how our commodity channel index looks like. Perfectly, right? So once you have done your setting, this is exactly what you will see. So now, looking at this particular scenario, just a glance at this, you know that price is in a downtrend. Looking from our 4-hour time frame all the way, price is in a typical downtrend. So now let's try to see how we can do what? Identify divergence. Look at what happened here. This is a lower low, this is a lower low. Look at our indicator window, a lower low and a lower low. So what you are seeing here is a regular price movement. But let me show you something, and I want you to observe this. Look at this point here. Let me get a line and observe this. This is a typical example of a hidden divergence. You can see that price is giving us equal high, right? That is an equal high. And look at our indicator window. The indicator window is moving this way. The indicator window is pushing to the upside. This is not an equal high on the part of the indicator window. This push to the upside is not an equal high. Look at this. What you are seeing on this chart is what is being represented here. You see now, price is not making, in this scenario, we have this point, and then we have this point, and we have this point, and this point. This is not a higher high. This is an equal high, but indicator window is giving us what? It's giving us a typical example of a what? Of a higher high. So there's a disagreement here. So this is a typical illustration of a hidden divergence. So this hidden divergence signifies trend continuation. So you can see that this is a typical trend continuation, and you can trade this. If you have your trend line here, you can see that this is a pattern, then price break out of this, so you can have your sell entry. After this breakout, you sell, then your stop loss is here. Already you have this divergence as your additional confirmation, and you can see how that works perfectly well, and it plays out beautifully well how it ought to be. Now here is a regular divergence. Look at what happened here. Price is giving us what? Price is giving us a higher high, but look at what the indicator window is doing. The indicator window is moving to the downside. We are having what? Instead of a higher high, we are having a lower high. Can you see that? This is a higher high, but what we are seeing here is a low and a lower high. So this is a regular divergence. And after that, remember we said this is used to support what? A reversal. Price has been buying, and immediately after we had this, you can see that here is our previous structural point. Price now breaks structure. So from here now, we have a break of structure, and that is where the reversal of this trend begins from. So this is pretty much simple. Look at this. This is a trend continuation because price pulled back. This is an uptrend. Price pulled back to retest the middle Bollinger Band. What we had, look at this. You can see this is a divergence. Look at what the indicator window is showing us. Price is doing what? Price is giving us a lower low, but the indicator window is giving us what? A higher low. And then you see how price push all the way to the upside. Remember, you must understand the trend so that you can know what you are looking for. This is a typical example of extended divergence. Look at this. We have equal low here, and we see that our extended divergence is for trend continuation. Equal low, but look at the indicator window. The indicator window is giving us what? A higher low. Do you see that? And afterwards, we have this price that continue in that direction, and there is a confluence. This divergence happened around the zone of our middle Bollinger Band. So you can see it plays out correctly, it plays out effectively. Look at this again. Do you see this? Do you see this? In the next video, I'll be sharing with you how you can trade this divergence in confluence with the Bollinger Band, and not just the Bollinger Band, but the Bollinger Band period 130. You realize that the setting of this Bollinger Band is not the regular way, not the regular setting of the Bollinger Band that you know. This is a unique setting of the Bollinger Band. Look at this divergence. Price is pushing high. Look at this hidden divergence, and this is giving us a low. You can see how the trend continue. You see that the breakout here is your entry, and you see that movement. This is an effective strategy that I want you to backtest on your chart. You can see to the middle Bollinger Band. In this case, price pull to the middle Bollinger Band zone, and you have your entry. You see that movement? Beautiful, simple, and highly effective. So watch out for the next video where I'll be showing you how you can combine divergence and Bollinger Band in order to have an effective and high profitable trading. And if you are yet to subscribe to the channel, please do well to hit the subscribe button, turn on your notification, you'll be the first to get notified. Do not forget to give this video a like and please share. What that means is that you are contributing to this channel, the growth of the channel, so we can reach a wider range of people and so that people can benefit from what you are benefiting. Thank you so much and see you in a subsequent video.